Welcome back to EDU-Tutor. Today we're going to look at May-June 2021 Principles of Accounts, Paper 2, Question 2. And it says Edward, a sole proprietor who owns and operates Sundell Enterprise. The following transactions occurred in March 2021. They list a few transactions and they say use the information to prepare journal entries to record the transactions in Sundell Enterprises books. Narratives are not required. All right, so the first transaction or the first item says Marcella, a credit customer, owes Sundell Enterprise 4,800. Now, I want you to ask yourself, is this a transaction? And the truth be told is that this is not a transaction. This is just a statement telling you that Marcella owes Sundell 4,800. So we don't record anything for that because Marcella did not say that Marcella sold him goods in which he owed for that amount, right? So on the 17th, Sundell Enterprise receives a check of $1,300 from Marcella for part payment on our account. So we need to record this. Hope you record that. You normally debit the bank account because it's affecting check, and we credit Sundell's Enterprise. Sorry, we credit Marcella, which is the person who owes Sundell. All right. So here you see it reflected in the general journal. We're going to debit bank, credit Marcella, remember to indent, and remember that narratives were not required, so we don't need to put anything for that. On the 31st, Edward learns that Marcella has ceased trading and the remainder of receivables from Marcella is not collectible. So Edward authorizes a write-off of the balance. Now, when we write off something, we write off a debt, we call it balance, we call it bad debt. So bad debt is an expense in business and it is usually debited. So we debit bad debt on the 31st of March and we credit Marcella to reduce her account, showing that she no longer owes this amount, or specifically that we're writing off this amount. Alright, so that is why we do that. And that's the answer for that part of the question. Then it says at the end of the financial year, on the 30th of April 2021, Sundell Enterprise has trade receivables of 32,700 and a provision for doubtful debt of 1,170. Edward estimates that 3% of the receivables would be uncollectible. So we should calculate the amount required for adjusting the provision for doubtful debt account at the end of the financial year. So please note that they did not ask us for the provision, the new provision, right? They asked us how much we need to adjust it to the new provision. All right. So the year before, the provision was 1,170. And now we need to adjust it to 3% of 32,700. So the new provision is therefore equal to the 3% multiplied by the 32,700, which gives us 981. Now we need to recall that the year before, the provision was 1,170, and they are asking us what we need to bring it to the 981. So therefore, we're going to have to find the difference between the 1,170 and the 981 because they're asking us how much money we need to find to get it to that 981. And when we did the subtraction, 1,170 minus 981, we got 189. So this is usually treated as a revenue because there has been a decrease in doubtful debt between 2020 and 2021. Now you don't need to have that statement, but that's just there to explain why we got how we would record that 189 in our books. So it would be treated as a revenue in your trading and profit and loss account. Then it says record your answer from B in the provision for doubtful debt account. So this is usually your debit side for your provision for doubtful debt account, and this is your credit side. Now, when you're reducing your provision for doubtful debt account, we debit it. So here we're going to have the 21, which is the year, the 31st of March. The income statement would be the details of the profit and loss account, whichever one you choose to put, and the 189 would be the amount. Very simple. And it says complete the following tables to show how each of the following transactions will affect Sundell Enterprises financial statements for the year ended the 30th of April 2021, giving an explanation for each transaction. Number one, received an order from a customer for goods to be supplied in June 2021. Now, this will not affect your financial statements. And why? Because remember that we are doing the statement for the 30th of April 2021. Therefore, we haven't received the goods as yet. So this transaction will take place after the current financial year. So it would not more than likely affect your financial statements. It says Edward uses personal savings to purchase a vehicle for private use. Now notice this: personal savings, private use. He did not use a business money, so therefore it will not affect the business account. Alright? And he did not buy for the business, so it will not affect the business account. So I said no, he uses personal savings, which will not affect the business's financial statements. Number three, the purchases account was incorrectly added up and was overcast by 1600. So yes, this will affect your financial statements because remember that this figure is included in your trade and profit and loss account or your income statement, which is one of your financial statements. And therefore, if the purchases account is overcast, this will cause your cost of goods sold to be overcast, and therefore your net profit would be less than the amount that it should be. So everything after your purchases would be affected. Your cost of goods sold, your net profit, your gross profit. So it will give you an incorrect financial statement. Then it says on the 1st of June 2021, balances taken from the purchases ledger were as follows. Totals taken from the books of original entry was as follows, and balances at the 30th of June 2021 was as follows. So note, please, that there was not any credit balance for your ending balance. So we need to create a purchases ledger control account for the month ended the 30th of June 2021. Balance the account and bring down the balance on the 1st of June 2021. Alright, so the first thing that you would usually do is to write in your opening balances, which would be based on the date, which is the 1st of June 2021. Right? And we're doing it for a month, so the closing date would have been the 30th of June 2021. So we would get 1020 for our debit side, for our balance BD, and 29,040 for our credit side. Alright, so we usually put in the rest of the information. We have credit purchases. This goes on our credit side because this increases our creditors account. Payment of trade payables goes on our debit side. So I'm just going to write them beside it and then you'll see how I put it in the table. Discounts received, debit. Interest charged on overdue accounts, credit. Contra entry set off from the sales ledger, debit. All right. All right, so you see where we have the payables on the debit side, the discounts received, the set off contra entry. So we just fill in the information, the totals, and we put the credit purchases and the interest on the credit side. So then it leaves us the balance off. So we add 1020, 109, 250, 2009, 70, 300, and remember that they have a balance that we need to end with of 540 on the debit side. So I filled in that 540 on my credit side. Why did I put it on my credit side? Because I want when I get my balance BD on the 1st of August, it should be 540 on the debit side because that's what they told us that it's going to be. So 540 on the debit on the credit side. Now because we're sure of the credit side, we can add up to get the total of 154 to 620. And then I subtracted what I got from here out of my total. So I got 113,540, and I subtracted from 154,620, which gives me 41,080. Now that I know is going to be my balance TD on the debit side, which when I bring over, it will be on the credit side on the 1st of August. All right. So you first put in what you are sure about, which is the 540. You total that side, which is the debit side, to give you 154,620, and then you minus what is up here in these four totals from it to give you what your balance would be on the debit side, which would be brought over to be on your credit side. Now, remember that we were not sure about what this total should have been. So that is why we had to work it like that. Alright, so I hope you understand. If you have any question, just comment below. Then, so that would be an answer for that part. Then it says state one use of control accounts in the accounting process of Thunder Enterprise. So control systems are generally just used to find errors and to check if there is any errors at all. Alright, so thank you for listening. Hope you learned something new.